Just WTF is going on in China right now, and why does everyone keep talking about an impending collapse of the Chinese economy? Well, the reasons are many and varied, from the new sanctions being proposed, from the property market woes, to the insane COVID policies, supply chain collapse, there's droughts. It's crazy. The world's second biggest economy is facing some serious challenges right now. And in this video, I want to break down what those challenges are for you. My name's Lark. I make videos on investing. If you do like that topic, then please do subscribe to the channel. Leave a thumbs up on this video. Let me know if you do appreciate this kind of content. Also, make sure to subscribe to my weekly cryptocurrency investor report. My team and I share the information that you need to know to make money in crypto. You can sign up for free using the link down below in the description. So let's talk about China and try to have a sober, no BS look at the situation. The reason I want to talk about China again is because particularly of the new round of economic sanctions on China that is being brought out as an attempt to deter any military action against Taiwan. You know, the psychos running the world, they really do want World War III, don't they? Yeah, anyway, in addition to more military equipment being sent to Taiwan, Taiwan also received a visit from Nancy Pelosi recently, which Beijing called an egregious provocation. The US also added new sanctions in 2022 to increase pressure on China, particularly that it would expand sanctions to prevent American investments in 59 different Chinese companies that allegedly contribute to the Chinese military. The Chinese government has responded to all of this by passing a sweeping law in June to counter US and EU sanctions on Chinese officials and Chinese companies. Now, those involved in designing or implementing these different sanctions packages from the United States or the European Union could actually find themselves or their family members denied visas to China, perhaps as well their property in China, if they have any, may be seized, and any commercial transactions that they might want to make with Chinese institutions could be blocked. Now, all of this just ratchets up the tension on China's other economic woes. They also have a political situation going on, the whole Taiwan thing coming to the forefront again. Because as the lockdowns and the real estate crisis and the banking scandal all continues, we have China out there cutting interest rates in short-term liquidity to banks, and the central bank also cut the rate of its one-year lending facility in order to try and maintain reasonable and sufficient liquidity in the banking system. And then in August, the Chinese yuan actually sank to its weakest level in 2 years after Jerome Powell, man, is always up to something, isn't he? Anyway, he comes out and announces that the US banks would fight inflation with more historic rate hikes and pump life back into the dollar. Interest rates became a major focus for banks once again in China when 7 of the largest banks in China actually announced that they would be cutting rates on deposits in hopes of accelerating economic growth in China by reducing the money supply. China's debt to GDP ratio has also been increasing dramatically the past couple of years, particularly due to the pandemic, and remains actually one of the biggest economic challenges for China at the moment, reaching an all-time high of nearly 290% of gross domestic product in the third quarter of last year. But despite efforts by China to dig its way out of this economic crisis, growth has actually come to a screeching halt, with performance recorded as the weakest that it has been since the first quarter of 2020, when the whole COVID thing happened. Now, that is a time when China's economy came to a near standstill due to COVID. But economists say that this year's Chinese economic growth might come in actually below 3%, less than half of last year's 8.1%. In fact, the CCP has even stopped talking about being able to meet its 5.5% target. And a big reason for China's continued troubles in growth is their totally insane zero COVID policy. So China's leader Xi Jinping has made clear that zero COVID is as much of an ideological undertaking for the nation as well as a public health one. Since August 20th, at least 74 cities with a combined population of 313 million people have imposed lockdowns. It's like entire citywide lockdowns. It's insane. Districts, neighborhoods, the works. It's crazy. This is causing, of course, major havoc on the mental health of regular Chinese people. There's been reports of people jumping off buildings, so they're just losing their minds over these COVID lockdowns. Then we have the economic impact, which of course could be truly devastating, especially for the youth of China. Youth unemployment in China reached 19.9% in July. That is double what it was in 2018. China can simply not afford for the rate of unemployment to continue to rise like that. It's crushing, especially not amidst everything else that's falling apart in the country. If they just had a youth unemployment crisis, it'd be one thing, but they have all this other stuff too. Like the fact that China has also been hit with the worst heat wave in 140 years, because of course they have, leaving dozens dead, causing massive closures of factories, the ones that were still in operation amidst the COVID lockdowns. Yeah, they had to close anyway. The effects of the heat wave have caused the government to actually issue a drought warning for like the first time in almost a decade, as the country is just dealing with this situation where they have below average rainfall. In fact, the drought has affected more than 2 million acres worth of Chinese farmland in 6 different provinces, which prompted both Goldman Sachs and the financial services firm Nomura to lower their forecasts for China's GDP growth this year. We've also seen cuts in hydropower generation, which have even caused rolling blackouts in some regions and have, of course, then caused more factories to shut down and also leaving millions of people desperate to cool down in the face of that heat wave that came. And of course, with the closing of factories, the big heat waves that happened, the droughts, right, the lockdowns, all this stuff, this has caused massive supply chain issues the past few months in China, because so much of the global supply chain relies on Chinese goods and labor. Is a very important thing to factor into the global economic picture. Now, finally, let's talk about China's cooling property markets. So the video we made previously, we talked about the payment boycotts where people didn't want to pay because the houses were not finished. Well, that's continuing. We have desperate home buyers still refusing to pay their mortgages on unfinished homes. The Agricultural Bank of China reported that the amount of overdue loans has actually doubled since their August report. But now it seems that at least the troubled builder Evergrande, which kicked off so much of this chaos in China and globally, has vowed to resume all projects beginning the end of September, hoping to quell the concerns of the boycotts that are continuing around China. It's already resumed building 668 of the total 706 projects that they have under their management. Chinese banks are also being advised by the government to help the country's debt-ridden property developers in any way that they can. That, of course, signals China's need to stabilize the real estate markets domestically while attempting to ensure that these pre-sold homes are actually getting finished and stop people protesting in the streets against it. But since Chinese property developers hold relatively small amounts of overseas debt, the global economy, in spite of this property crisis in China, is not considered to be at high risk of financial crisis. But of course, the size of China's economy, which accounts for almost 1/5 of global GDP, means that a major slowdown in China could still have a serious effect on global growth. Look, at the end of the day, China, like so many other countries, is having a deep economic crisis right now. Join the party, China. This will be a global recession. No one anywhere seems to be spared from this. And no, China's economy is not going to collapse. It's going to take some punches, without a doubt. But while all of China's woes do indeed add to the overall grim macroeconomic scene right now, and so much of the world economy depends on China, none of this is going to stop China, nor is it going to stop the inevitable changing world order. Remember, China is set to overtake the US economy by as early as 2028, for better or worse. A new top dog is rising, and yeah, they've got economic challenges right now, but that is not going to stop them. Anyway, just my 2 Satoshis for the day. Let me know what you think about any of this situation going on in China down below in the comment section. Thanks so much for watching today's video, and peace out till next time.